I am Marion B. I hold an MBA in Finance and Accounting. I am a finance professional, but I am not your financial advisor. This audit is for educational purposes only. I heard a cool quote Warren Buffett said. The best investment you can make is in yourself, your education. Here is some education. I should have looked that up, but if he didn't say it, it's still good advice. Now let's go. Here are the top 5 AI stocks for beginners. Everyone is talking about AI stocks going crazy, but as someone with an MBA in finance and engineering background, I don't look at the hype, I look at the fundamentals. The best way to teach you is to walk you through the way that I think. You need a strategy that would survive a market crash like 2022. Today, we are auditing the top 5 AI stocks for beginners, looking at their 5-year performance and why 2022 was the most important year for a beginner to examine. And as a little bonus, I'm giving you guys the momentum strategy 101, and we will see how it compares to the heavy hitters in the list. Before we look at the winners, we have to talk about the great AI reset in 2022. In 2022, the market didn't care about your technology stock. It only cared about interest rates. So most people in the market took a tail beating. Most stocks tanked around 20% and tech stocks were down over 30%. It was a scary time to say the least. Russia had invaded the Ukraine, which has sent oil and wheat and fertilizer prices and everything else to the moon. I always want to say that, so I slipped it in the moon. Also, COVID had a grip on the world. Nvidia, the so-called super stock, dropped nearly 50%. They weren't so super, dropping 50%. And Meta, aka Facebook, they lost over 60% of their value. At the time, people were wondering whether or not Facebook would ever recover. Amazon was cut in half. Amazonians were wondering if their AirPods would ever come in on time, would the company go bankrupt. It was a wild time to be an investor, and it was also a teachable moment. For a beginner, 2022 is your most important data point. There will be terrible years, but investing is a long-term game, so you will usually land on your feet after some time. You need to understand the history of investing and the history behind these companies before you jump in. Also, the why. Why should you even jump into these stocks? And we're here to go over that. Based on my homework on this, here are 5 picks often considered the entry point for AI stocks. And the momentum strategy, I promise, is coming. But let's go over the list first. Different sources may give you some different numbers, so please don't put it's off by $5 or something in the comments. I know it's just the point you need to get. Here is the AI list for beginners. We'll base this on you having put up $1,000 in a given company and what you would have had 5 years later. Coming in at number 5, Meta, aka Facebook, aka Mark Zuckerberg, the gambler. Zuckerberg turned 2023 into the year of efficiency. They used AI to make ads more profitable to get out of the 2022 slump. The return, 1,000 in 2021, 5 years later, will be worth roughly $2,416 today. That's a bunch of money to buy Meta glasses and Bad Bunny tees. Why I don't have it as number 1? When his returns kicked tail, Zuckerberg went crazy with the metaverse gamble, so he can possibly go crazy and gamble again at any time. And this must be considered if you invest. In investing, we call this qualitative analysis. That is when we consider things outside the hard numbers, aka quantitative analysis. The company is not too diversified in my opinion, so the volatility, not the returns, landed it at the last spot. Coming in at number 4, Amazon, aka the web backbone. How they make money. Amazon, known as Amazon Web Services to the nerds, and you thought Amazon just made money off of selling you Fire Sticks and Mr. T Jibba Jabba t-shirts. Amazon is the landlord for AI startups and almost every website out here. Every time a startup trains a model, Amazon gets paid. The return, $1,000 in 2021 would be worth roughly $1,418 today. Not the biggest guy in the room, but a heavyweight to say the least. Also, they are more diversified than Meta, and being an AI landlord could make them a leader at any moment based on their backbone. Now we're going to get into the bronze medal. Number 3. This goes to Alphabet, Google. the search engine, aka rock solid leadership. Why they're well rounded? They make their own chips, TPUs, they own the data, search, and they own the model, Gemini. Now let's get into their returns. $1,000 in 2021 would be worth roughly $3,482 today. Not too shabby to say the least. Diverse enough to win the bronze. When the market tanked, they didn't lose their shirt like others did. In 2025, their returns were greater than Nvidia, which underscores that the leaders of the company know what they're doing. Google is a titan in the industry that can only be beat by unprecedented gimmicks and anomalies. Hey Google, spell unprecedented. Now, number 2 is the first loser. That's a terrible saying. Microsoft, by the way, the software vault. They have the most diverse revenue. If AI slows down, they still have Office and Azure. And this is real good to think about. Their return, $1,000 in 2021, will be worth roughly $2,277 today. But they do pose a risk. They have slower growth than chips, but much higher stability. When 2022 hit and everybody was tanking, they were the top performers. This counts when tech is boring or down and not much is going on. You need a company that will still deliver. And at the number 1 spot, as if anybody could beat them right down, is Nvidia. They own 90% of the AI chip market. The return, $1,000 invested in 2021 and not touched until the beginning of 2026 will be worth roughly, drumroll, $14,295 today. Now that's high volatility if there ever was any. It's an engine, but engines can overheat and break down. Don't forget that. We saw that in 2025 when in that year alone, Google beat them. Things have calmed down and Nvidia may be a gimmick that Google has figured out. Only time will tell. But those returns, if you would have, could have, should have invested in day one, they were truly amazing. But that's not the way investing works. We don't bet the world on what happened yesterday. That's a good way to lose your Mr. T-shirt. Now, this is a good list to research to get you started in AI. We're going to compare our list to the momentum strategy I spoke about earlier next. Now let's get into this cool momentum file stuff. You can make your own tech ETF in your secret stock lab at your kitchen table over a bowl of cereal. That's when you pick 3 stocks that did well the year before and look at them the year after and how they perform. It's called a momentum strategy. It's based on behavioral finance. Things don't usually fall off a cliff. Last year's favorites will more likely be strong contenders for this year's favorite. If you've used your momentum strategy, simply picking the 3 best performers from the previous year, for example, the top 3 in 2020 for 2021, top 3 in 2021 for 2022, and so on, your $1,000 from 2021 would have grown to $3,760 by 2026. And that's pretty good. But notice the math. You would have had seen your account value drop significantly in 2022, just like everyone else. And that lets you know that the secret to the market isn't just picking a stock. You have to have the energy to stick in there when the stock looks real bad, like in 2022. That was bad. And setting up a loss prevention plan isn't the worst idea, especially for a beginner. Getting out when things drop 30% or whatever your number is okay. This is chess, not checkers. It's a little beginner strategy that's not too hard to learn, and it's fun. And you'll have your own momentum files once you figure it out. You can also look around and check the 10K filings for these companies and dive a little deeper into what's actually going on and how they make their money. Now, before I go, I want to leave you with 5 things to look at, right? Number 1, the 5-year power play. Notice Amazon. If you chased the individual years, you would have had a lot of stress, losing 50% in 2022. But if you just held from 2021 to 2026, your $1,000 grew to $1,418. It's the smallest gainer on the list, but it still beat Meta on the down year. Now, the second point, the NVIDIA outlier. As a finance pro, you can point out that NVIDIA's 5-year hold, $14,200, is statistically an anomaly. The chances of you repeating this is super duper slim. I warn beginners, don't look at past performances like that. It doesn't happen. It's cool to talk about, hey, if you would have got in there, you'd have had that much money, but it usually doesn't happen. So just treat it like an anomaly, do a little dreaming, and move on to what really can happen and what really goes down. Now, the third point is the Facebook recovery. Meta's 2022 financial nightmare, your $1,000 becoming $336, because of their year of efficiency later, yanked it right out of the toilet bowl. And their 5-year hold still resulted in a massive $2,416. This is a great story about management turning the company around. And the fourth thing, stability of the big two. Microsoft and Alphabet Google are your steady audit picks. They never fell as hard as Meta or Nvidia in 2022. This makes them much easier for a beginner to study what a strong, diverse company looks like. And number 5, diversity. The best thing about diversifying is you can be on wild boys like Nvidia and still have the backing the stronger guys like Google and Microsoft have if things go bad. I'm Marion B, and this has been a financial audit. And as usual, stay greedy and maybe even stay AI. Who knows? Bye, guys.